So you have all these totally gargantuan numbers that nobody can even fathom what is going on. All these little experts that claim they know exactly what's happening. And I'm saying that I don't know exactly what's happening, but this is all so crazy that something's got to give here, and nobody knows what it is, and the Fed doesn't know what it is, and I don't know what it is, but nothing about this is stable. That's all we know.
Thanks for joining us today on Wall Street Silver. I have Andy Schectman from Miles Franklin and Rafi Farber from...
You could call it, you say, I'm from the Endgame Investor. That's my service.
The
Endgame Investor.
Hey, Rafi, I wanted to get you, you've been doing some interesting stuff lately, and I wanted to get you on Zoom real quick to talk about it. So there's two things we want to talk about today. Both, you're taking delivery of a full Comex contract, 5,000.
Trying to.
Andy's involved with that, along with a few of your other co-conspirators.
Yes.
And you also had an interest, we'll get to that in a minute, but you also had something really interesting you wrote on Twitter the other day that I wanted to talk to you about. And let me share, and you just wrote something on Seeking Alpha. The Fed, after their FOMC meeting, they established this new repo facility for another $500 billion. And I saw I've seen a lot of different takes on that as to why they did that, but your comment sort of jumped out at me that this new standing repo facility, it essentially pins short-term interest rates permanently at between 0 and 0.25%, basically sacrificing the dollar. Could you explain what you're talking about here to our audience as to why that's the case?
Yeah, but before I explain it, just to make a little bit of a disclaimer, it's not like any of this is normal or standard finance that you can get a degree in and study it. I mean, this is all new, crazy stuff like designer drugs that they make on the street, and they change the molecular formula every few days because something new comes up, and this is like really weird stuff that nobody really understands, not even people who are doing it. So, I mean, it brings to mind, I remember an episode of The Simpsons when I was a kid, when Homer becomes the new sanitation commissioner. It starts off with, he's building a garbage tower, and the rule in the house is that if the garbage tower falls over, you got to take the garbage out. So you see the beginning of the episode, he's like stapling banana peels to the end of the garbage can and trying to make it not fall over. I mean, that's kind of what's happening here. There's this huge pile of garbage, and they're trying, the Fed is trying to keep it from tipping over, and the one side comes up and about to fall over, they push it the other way. And that's what this finance stuff is. So, I mean, what happened?
The best economics analogy ever was just given right here. Thank you very much, Rafi. Okay.
Yeah. So watch The Simpsons, you'll understand the Fed, I guess. I don't have a degree in all this weird finance. I'm just trying to figure out logically what's going on with what I can decipher. And from what we do know that, back in September of 2019, before the world ended, the Fed was shrinking its balance sheet at the start of 2018. So for about 20 months, it was reducing its balance sheet, which means it was selling bonds, taking in the liquidity and retiring it. It's shrinking the monetary base. So that worked for about $730 billion. And then reserves got too small to handle all the debt that was in the economy already, that all of a sudden there was a bidding war for reserves. And nobody had any extra that they could lend because of all the regulations that nobody understands. And then short-term interest rates went to 10%. And then the Fed was, oh, we didn't expect that to happen. We better start raising the balance sheet again. And so, I mean, they didn't expect 2008 to happen either. And that was almost the end of the world. And every time the world almost ends for some other reason. And then they're saying, oh, well, the world can end for that reason. The world can end for this reason. Basically, this whole financial system is so completely unstable that it's going to end. And there's going to be another tip over the giant garbage thing. And the Fed's going to try to stabilize it in some other direction. So this time they're trying to prevent repo rates from going back up to 10%. And they're doing that by creating this something called a standing repo facility. So basically, whenever they see that there's stress in the repo market, they'll already have everything in place to immediately push the liquidity button and start, keep it greased up again. So in September 2019, it took like 3 or 4 days for them to figure out what was going on. And in the meantime, everything almost toppled over. This time, it's going to take them a few minutes. So, but I mean, that's fine for the financial system if they want to keep the pyramid growing. But the question is, when they have to really fight inflation, and at the same time they have to slam reserves into the system to keep repo rates from going to 10%, you're not going to be able to fight inflation that way. And the reason I say it's permanently pinned, because technically, yeah, they can raise the rate to whatever they want. It doesn't have to be permanently pinned. But the only reason, if you think about it, the only reason they would activate the standing repo facility is because there's an extreme dearth of liquidity. So why would they raise rates in that emergency situation? They would keep it as low as they possibly could. But at the same time, you're going to have raging inflation. What the hell are they going to do?
Well, the other thing that's going on here, they've got this reverse repo where they've taken $1 trillion now of liquidity out of the market. And they've got this other thing, 500 billion, where they're making it available to push into the market. This just means the interbank banks won't lend to each other. The ones that have excess capital want to give it to the Fed. The ones that need capital want to take it from the Fed, but they don't trust each other to trade interbank overnight. That's what's basically happening here.
Yeah, it seems that way. I mean, yeah, reverse repos are over $1 trillion now, and that just means there's too much cash in the system and nobody knows what to do with it. So before they activate a standing repo facility, all these reserves are somehow going to have to be put into the banking system, and that's going to skyrocket the money supply just in terms of that. And they're continuing this QE. So you have all these totally gargantuan numbers that nobody can even fathom what is going on. All these little experts that claim they know exactly what's happening, and I'm saying that I don't know exactly what's happening. But this is all so crazy that something's got to give here, and nobody knows what it is, and the Fed doesn't know what it is, and I don't know what it is, but nothing about this is stable. That's all we know for sure.
Something's going to break. Mr. Schectman, what's your take on all this?
Yeah, I mean, what Rafi said is very logical. I mean, you see a Fed who said they're not going to raise interest rates for the foreseeable future. They're not going to stop asset purchases for the foreseeable future, at least until employment normalizes, which is disingenuous because in 2019, with 3% unemployment, the lowest it had been in 50 years, or 4 or 5%, whatever, it was very low. They lowered interest rates 3 times. And so it's just more lip service. You're looking at a situation where they have to continue to inflate or the whole system pops. And what I think they're looking for here is somewhat of it's a facade. In other words, when price inflation gets out of control and they have to appear as though they're going to taper, I think that's when you see the markets go into gyrations. And right now we're at the opposite end of that spectrum where there's so much liquidity in there and so much mistrust that they would rather give their money to the Fed and earn 5 basis points instead of lending it out and earning 100 times at 5%. So I think they're setting it up knowing that this is really the path they have to go down, where they're going to continue to flood the system with money. But when it gets to the point where they have to appear as though they're attacking price inflation, that's when the whole system goes belly up and breaking the buck and the markets start to collapse. That's when they'll come in and have this in place. But I think it's only a facade. And at some point, I think the market realizes that they're trapped. So it's showing a little bit of proactivity on the behalf of the Fed. But to me, it's all smoke and mirrors, and it doesn't amount to much of anything at all other than giving them a little more time to maneuver when things get to the point where they have to appear as though they're confronting inflation.
You know, you've got this really interesting project you guys are involved in together, along with Chris Marcus and a few other people, where you guys have signed a contract, or not a you've purchased a futures contract, Rafi.
Yeah.
And you're planning to take delivery and sort of document that whole process and share it online with on Chris Marcus's channel and elsewhere.
Yeah, that's the plan. I mean, we're blessed enough to like have a team of people that we just trust each other, unlike the banks. And, we take each other's word and we're trying to do this. And look, so far, I opened an account at Interactive Brokers, and there's been one mishap after another. I mean, I haven't lost any of the money. Everything's fine with that. But there's all these kinds of weird things that get in the way. Like I bought an August contract, and then I tried to take delivery on it, and then it said I was short cash, even though I had all the cash of the value of the contract at the price that I bought it at, because there's something called weight tolerance, right? So weight tolerance is all the bars in the Comex aren't like they're not weighed by an algorithm or anything or a computer program. They can differ in weight by 10%. So you need to have the cash plus 10% if the bars are 10% more than 1,000 ounces each. So you have to have more cash in your account than the contract tax actually worth by 10%. So fine, I put 10% more cash in, and then, I clicked the delivery button, and then the next thing I know, it says we can't value the contract at this time. So then I either have to be force rolled out in September, or I have to call, I have like 2 hours to call customer service and figure this out. So this is the first time that Interactive Brokers is ever having somebody attempt to stand for delivery on a physically settled contract ever in the history of Interactive Brokers. So at first I thought they were trying to pull my leg here and just trying to get business. But then I figured out, like, I asked them, like, how are you calculating how much cash needs to be in the account? What's the math? Like, what are the numbers here? And they couldn't answer the question. They said, we're not sure. We don't know why the algorithm is not valuing the contract and this and that. And like, my sense is that they're not, trying to fool me as much as they have no idea what they're doing.
They shouldn't have sent out paperwork or advertisements claiming that you can take delivery, because for a guy like you and with resources, with my Brinks connections and Chris and everyone else who is smart enough to know what's going on, if it's this hard for us, how hard is it for the average person who just wants to try to get exposure and actually do that?
Chris and I were asking each other, like, why doesn't anybody do this? Why doesn't anybody close the spread? Why aren't people taking delivery and then taking the bars, making coins, making money like that? And then people would just say it's too much of a hassle. It's too hard. Now we're figuring out why.
No, I had an Interactive Brokerage account back in February, and I tweeted at the time that I was planning on doing this. And then I looked into it, and at the time, Interactive Brokers did not allow physical. They had futures, but they were one of those companies that did not allow physical delivery, and they automatically close your position 2 days before the contract closes. So you're exactly right. They did not do this in February when I looked into it myself.
For the people out there who don't quite understand what Rafi was saying, in the 31 years I've done this, I do not believe I've ever seen a 1,000-ounce bar that is 1,000 ounces. They're either above or below the 1,000-ounce. So what he's referring to is that you have to have enough margin to be able to cover if the bar weighs in excess of 1,000 ounces by 10%, which is pretty unrealistic that you'd see a 1,100-ounce bar, but it's possible. But in general, they're 1,040 or 960 or somewhere in that range, and that's what he was talking about as well.
What do you think is going to happen, Rafi? How's it looking? Have you gotten through all the hurdles and it's about to happen, or?
No, I haven't. The last thing on Friday was I clicked the delivery button again, and it said I was $219 short. And I called them up again and said, where is this number coming from? I have more than 10%, above the price that I bought the contract. It should all clear. And they say, oh no, it's the weight tolerance plus the value of the contract plus the amount of margin you need to hold the contract in the first place. So you need to add that. So I was like, okay, you want $300 more? I'll put $300 more in. So I'm waiting for that to clear. And then once it clears, I'm going to stand for delivery again. And then I expect them to say something like, we can't value the contract, at which point I'll call them again. And I think technically they said that if the delivery button just doesn't work, no matter what I do, I can submit a ticket to the system and say that I have an intent to stand for delivery in writing and clear all the stuff out of the computer and they'll just take that ticket and submit it to the Comex, and I'll get the warrant. That's what they say. I don't know what they're going to do. And then once if I can get the warrant, that's where Andy comes in. If I can't load out, I would transfer the bars to his account at Brinks, and then he'd take ownership of them, and that'd be it.
And then move to Tahiti.
Yeah.
Exactly. Here again, I guess my only problem in all of this is that, it seems that they kind of put the cart in front of the horse in promoting the ease of this. I read their article, it made it seem like it was the easiest thing in the world. And for a guy as sophisticated as you are, and with the resources that we bring to the table as a team, it just goes to show the lengths at which the Comex is trying to prohibit bars from leaving the ecosystem. So, I don't think Interactive Brokers is disingenuous at all. I just think that they are fighting a system that is making it very difficult for bars to be removed from that ecosystem. So I guess I'll be interested to see how it all plays out.
I guess they want to be the only ones that control who has the supply. If industry wants to take a couple 100,000 ounces off the Comex, they want it to go through the bullion banks, not through people doing it on their own. So they create these obstacles or these hurdles just to make it, as you said, a pain in the. They want that reputation. They crave that reputation. And so to force you to go through their system, not your own. So I think that's
with the last few days of the June delivery contract into when they started taking delivery requests July 1st, there was over 200 million ounces in open interest, 3-4 days left in June, with only 110 million or so ounces behind it and registered. I mean, are we getting so close that they're getting frightened that they don't want people removing any more silver? I don't know if that's the case or not, but I mean, it just seems that we're right on the razor's edge there. So if I had to guess, this becomes more difficult than we think. And I would be shocked if you actually get to the point of being issued a warrant.
That's exactly what my cousin said. I had a cousin who worked at the Comex, and he changed jobs, I think, a month ago or so. But he basically said the hard part's going to be getting the warrant. That's going to be difficult as a retail. Once you do that, loading out is just a question of logistics, and eventually you can do it. But getting the warrant's going to be very difficult. I hope that I'll be able to. I mean, we have all of August to figure this out. And if we can actually do it, we'll know the path, and then we'll put out the message on how it's done, and hopefully more apes, gorillas, or whatever we call them, can join in and feast.
I don't think he's one of us, Andy. He's
well, you know what? He is at heart anyway.
At his heart. At heart, he just doesn't log in enough to find out the names or the lingo. Okay.
Apes, yeah.
All right. Well, thank you very much, gentlemen, for joining me for this quick little update. And I think I'm talking with you again, Rafi, in a couple of days on another topic. But thank you very much for giving us the quick update. Always interesting.
Always good to see you, Jimmy. Rafi, I'll be talking with you soon. You guys have a wonderful day. Stay well, both of you.
Have fun at Disney World, Andy.
Thanks, Jimmy.